Hello, everybody. Welcome. Let's get started right away. Overall markets are up. Dow Jones up 1.6%, Nasdaq up 3%, S&P 500 up 2.1%, Russell 2000 up 2.2%. Most of the overperformance is coming from technology, consumer cyclicals, and financials, as well as some industrials. It's a risk on type of day. Max 7 stocks are driving action. The yield curve has flattened today quite a bit. In the morning, all yield curve was down substantially after Trump said he's not going to fire Powell. But since then, the 5-year Treasury yield is actually up now. It's about 4%. And the two-year yield is up 6 basis points to 3.84. The probability of a rate cut has dropped substantially in the last few days here. In the morning, we got the mortgage applications index down 13% overall, but I think purchase index is up slightly year over year. New home sales also came up higher than expected in March. We're starting to get April data, macroeconomic data. S&P Global US manufacturing PMI came in above 50, but only 50.7. And services came in lower than expected and substantially lower than last month. So for April, S&P Global US services PMI came in at 51.4, down from 54.4. Oil is down 3% today to $62 per barrel. Gold is down substantially, down 3%. Let's read through a couple of articles. And if there are any questions, we can go into those. If not, we can call it a day. Let's start with the Reuters article. Give me 1 second. Wall Street's main indices rose on Wednesday as investors welcomed signs of a thaw in the US-China trade war and after Trump scaled back his threats to fire Chair Jerome Powell. Trump administration will look at lowering tariffs on imported Chinese goods pending talks with Beijing, Reuters reported on the day. That followed a Wall Street Journal report citing a senior White House official as saying that US tariffs on China were likely to come down to between roughly 50% and 60%, which, by the way, still holds, brings trade basically grinding halt. So I don't know if that makes much of a difference, to be honest with you. The prospect of negotiations between Washington and Beijing locked in an escalating tit-for-tat tariff war, lifted market sentiment with the S&P 500 touching a new 2-week high and Nasdaq jumping as much as 5%. Those gains built on early momentum after Trump said on Tuesday he had no intention of firing Powell, walking back on his comment that the Fed chair's termination could not come fast enough. However, indices paired back gains after US Treasury Secretary said excessively high tariffs between the two countries would need to come down before trade negotiations could proceed. Investors are beginning to feel more confident that perhaps the worst of the trade rhetoric is over and are beginning to focus on some of the fundamentals like earnings, said Peter Cardillo, chief market economist at Spartan Capital Securities. Trump's criticism of Powell had fueled concerns about the central bank's autonomy, leading to sharp losses in US assets, including stocks and the dollar, earlier in the week. Among key corporate results, Tesla leaped nearly 8% after the EV maker reported better than expected profit for its core auto business. CEO, I don't think that's true. CEO Elon Musk said that he would step back from his involvement in the Trump administration to focus on running his numerous companies. Most S&P 500 sector rose with the consumer discretionary and information technology indices up more than 3% each. The small cap Russell 2000 gained 2%, while the CBOE volatility index, Wall Street's free gauge, touched its lowest since April through. The apparent U.S. softening of China tariffs was a welcome sign for markets battered by Trump's erratic trade policies, as a result of which the S&P 500 is currently more than 12% below its February record close. That's also, I think, jumped to conclusions here. We don't really know that's exactly why. It's a pretty weak article by Reuters, unfortunately. Boeing gained 6% after reporting a smaller expected quarterly loss. Advancing issues outnumbered declines by 5-1 on NYSE, 3-1 on NASDAQ. Okay. Any questions, comments on macro or Tesla, please request to speak. Otherwise, I'm going to read one more article and then we're going to call the day. I didn't even listen to the call. Yesterday, I covered at 4:30 p.m. or so. I covered the earnings release, which is basically worse than expected on every front, worst in several years, and with no hope of recovering at all in the near term. I didn't listen to earnings call because it's mostly just false promises that will never come true. But if I could summarize Tesla's earnings in one sentence, I did that yesterday. So I'll pin some of these tweets at the top of your screens so you can go through those. But Tesla is essentially running break even, despite slowing down payments to suppliers and accelerating collections from customers. That was a $2 billion help to free cash flow in the quarter, which obviously is not sustainable because you can't just slow down every quarter payments to suppliers. Despite that and not paying its CEO, Tesla is break even. So adjusted for those, normalized for those, it would be substantially in the red. And I think that's going to be the theme here going forward for Tesla. You can go to my profile for other takes on this, but Tesla's fundamentals are not split below the operational milestones that Elon Musk had to achieve to earn his compensation plan. And especially on the adjusted EBITDA side, things are going to get worse. On the revenue side, it really never got to a point where he achieved all of his milestones. He kind of essentially did it with adjusted EBITDA, which obviously is, according to Charlie Munger, and I agree, and also Warren Buffett, it's bullshit earnings because it doesn't account for CapEx or depreciation. So it essentially just incentivizes growth. And especially in the easy money policy period in the last decade by Federal Reserve, the 0% policy, it was easy to do. And now that the interest rates are normalized, we're kind of seeing what the fundamental strength of the business that Elon Musk built, and it's not much. And the company is worth less than $100 per share. This is obvious, and it's only a matter of time. It's going to get there. I'm going to read one more macro article. Any questions, comments, please request to speak. Trump softens tariff tone amid empty shelves. Warning, market slump. So there was one meeting the other day with Trump and a couple of CEOs from Walmart, Target, and Home Depot. And I guess there's some comments that we should be aware of. And this is in line with my take on these tariffs. President Trump got a scare from CEOs and markets on Monday. On Tuesday, he blunted some of his sharpest threats, signaling a softer stance on China and retreating from fiery rhetoric targeting the Fed. The president is resolute in his goal of reshaping the economy, but he's sensitive to the movement of the markets and pleas of powerful corporate leaders and investors who fear the worst from his sweeping efforts. Monday was a tough day for Trump's goal of reshaping the global economy. The CEOs of three nations' biggest retailers, Walmart, Target, and Home Depot, privately warned him that his tariff and trade policy could disrupt supply chains, raise prices, and empty shelves, according to sources familiar with the meeting. And these are all in line with my take on Trump's tariff war, which should have never happened. The big box CEOs flat out told him Trump's prices are not going up. They're steady right now, but they will go up. And this wasn't about food. But he was told that the shelves will be empty. An administration official familiar with the meeting told Axios. Another official briefed on the meeting said the CEOs told Trump disruptions could come noticeable in 2 weeks. While that was happening, financial markets were slumping, stocks, bonds, and the dollar, as investors panicked about Trump's latest threats to oust Fed Chair Jerome Powell and step on the central bank's independence. Then on Tuesday, he turned the dial down. His Treasury Secretary, then his press secretary, and then Trump himself all indicated that trade talks with China were imminent, starting on a good foot, and would result in a deal with much lower tariffs than the current 145%. Trump then told reporters in the Oval Office that he had no intention of firing Powell, even though his top economic advisor said last week that the White House was studying the details of doing exactly that. Markets, having gotten what they wanted, promptly rallied hard, stocks soared, and the dollar surged. White House officials bristle at the notion of softness from Trump. One senior official said the president was just showing he's ready to make a deal and that he's optimistic we can move forward. Trump's shift in tone comes at the same time as the shift in Trump's orbit. Bessent has been exerting more influence in recent weeks, reportedly getting Trump's ear to the point of rushing the Oval Office when the other advisors aren't around to get him to ease off for the sake of markets. For the first time since he entered political life, polls show most voters disapprove of Trump's handling of the economy. And inflation, which he claims is non-existent, is still a little hot. Growth is slowing and manufacturers are losing confidence. Recession is not inevitable, but it looks more likely now than it did even a couple of months ago. Around the world, the sell America trade is taking hold as investors start to realize decades of orthodoxy about US assets as safe havens may longer be the case. I don't think that's true, but okay. So Trump is softening a bit, which is what we predicted. But it's not going to, like, these tariffs are not going to go away completely because he needs the money to pass his lower tax rates, which is the real goal here. In any case, with Doge failing miserably, it's obvious that the budget deficit will continue to grow, interest rates will continue to stay high, and Tesla's demand and other sectors, cyclical sectors, will continue to suffer. So I didn't listen to Elon's conference call because obviously it's just a bunch of BS and false promises. So it's a waste of time, really. And the fundamentals of the business continue to deteriorate now to the level that Elon had to achieve, as I showed at the top of our screens, that Elon had to achieve to hit his operation milestone. So it's obviously blessing in the sky, I guess, that the Delaware courts took the comp package away. Which he clearly didn't deserve. It's basically because of all the tens of billions of dollars of subsidies that he got from both the Biden administration and the Trump administration, and I just pocketed it. And I also gave it to his board of family and friends, which was also taken away. So at the end of the day, karma comes in, I guess. All right, I see no questions. Thank you very much, everybody. I'll chat with you all next time. Take care.